Hey traders, what's going on? Welcome back to another market outlook. This week we're going to be covering the first week of February. The old outlooks, the old markups for last week. Some of the trades that we've taken in Telegram are still here on the charts. But we're going to cover over these 5 or 6 major pairs, and we're going to have an outlook. I've already covered all of these other pairs, so let's just jump into it. Okay, so one thing to take note of here, we're on AU. We did have a bearish week. If we can just delete all these lines, because one thing that we should know, if we're coming from the previous videos, if we're in the Telegram, if we're staying updated with the trades that's actually being placed. Last week, these zones were drawn from the daily time frame. In most cases, these zones are just drawn from the 4-hour, considering the weekly and the 4-hour. Last week wasn't like that. So this week, we already know that we had a bearish week. If we just go to the weekly. So last week, we just had a bearish week. So this week coming along now, same bearish bias we're going with. We're following the weekly candle. So let's drop down to the 4-hour and see where our zones, our areas of key interest are. So for one, we definitely have this zone acting as a little resistance. We have the supreme high. Do we have any other areas in this? I do want to mark off this area here just because we can see that there's some iffiness going on. Some price action is playing around this area, whether it's rejections. Okay, so realistically, all that we need, all that we're looking for is a retest of market structure to these resistance areas for new lows to form. A lot of these AUD pairs are looking bearish, right? If we just scroll through, we can see that a lot of these AUD pairs are just seeming bearish overall. So we have the correlation, we have the understanding that AUD is maintaining a weak state of mind right now. Okay, so that's all that we really need to say. Same thing goes for these ones here. We need to pull back to any of these to take a trade back to the downside. Okay, and we need a rejection of these areas before an entry would ever be placed or anything like that. Let's pop down to the next pair. Euro USD, same thing. These support and resistances were drawn based on the daily time frame, and we didn't have the best week. This way that we're going through, following the weekly candle and drawing our support and resistance on the 4 hours the way we're doing it previously. It's the way that we've been doing it in the Telegram, and we've been getting phenomenal results with that. There has been a little bit of optimization to this as well. We're not doing the minimum pips of the minimum stop loss of 30 pips in these cases, like you've seen last week in the Telegram, though last week was a bit more of a mess. We will also be looking to hold our positions into next week. That's not something we've been doing in the Telegram either. So we just made some minor adjustments to help increase our profitability. So let's see. Euro USD was also a bearish week as well. We're going to go through and delete all these. Let's take a look at the candle. So here we are getting bearish momentum. I'll just mark this off. Next week, bearish, pointing downwards. And then we pop right to the 4-hour. Let's see where our zones are. We have the supreme high. And then we have this area here, which I'd like to mark off. Somewhat near the high, but we do have, I'll show hiccups there. Then hiccups here as well. And then last week, right before market close, we did have a hiccup there again. So I'd just like another retest of any of these areas before actually looking to go back to the downside. And I believe if we also do look at these other euro pairs as well. So euro Australian, we know that Australian is weak, so that means this pair would be sent upwards. And then we have this one looking bullish, bearish in this case for the euro pound, because once we look at the pound, I hope you'll be able to see as well that a lot of these pound pairs are very bullish. They've been bullish for the last 2 weeks, so that's something that we're going with. And then euro NZD, another thing that just appears bearish. So euro USD bearish. We can see that we've been having we can see what type of market structure has been forming here. Last week was a bullish candle. The previous week was a bullish candle. And then last week was a bearish candle. We had a major sell-off the previous week before that, just about the second week of January. So these are all things that we're taking into consideration. And then we have this area here, which is what we're playing on right now. Okay, so pop back down to the 4 hour, and essentially retest, rejection, and then we're looking for a continuation to the downside. One thing that you can note of is that I'm using the date and price range tool here. So when we actually draw our zones using this, it gives us the pip amount. So when we actually take our trades, in these cases, our stop losses will probably be just around 10 pips, 13 pips for the supreme high. And that's really good because on the other cases, we're doing the minimum of 30 and we're risking 1 to gain 3. So with risk 1 to gain 3, our minimum take profit is just around 90 pips. In this case here, we're getting a little better because if we take a 20 pip stop loss, we can now go for 60 pips, but it's still risk 1 to gain 3. It's still risk 2% to gain 6% at a minimum. And there's been a few more adjustments actually that the EA will be taking when it's taking its trades. Like there's a trailing stop system that's been added. So those things are just there to help the security and help things stay in our favor ultimately. So let's pop back to GU, where we have a bullish outlook on this one for this week. Here we have the bullish market structure is still there. It's coming from bullish market structure, and the more recent stuff is consolidation, right? So let me just start off by deleting all these. Weekly time frame, let's have a view. So last 3 candles are bullish, and next week we're going with the same bullish approach. Like last week, the bullish the pound Canadian was extremely bullish, one of our main dominant pairs for last week. So we'll just see how the pound wants to kick off and how it wants to maintain itself for this week. So we have the supreme low. We can see this resistance is acting very hard. Let's draw this like this. We are interacting with all these zones. May just do it like this, and we could tighten the bottom just a tiny bit. So just about 24 pips there for the stop loss. And then I'm not the stop loss, but well, yes, if we do take a rejection here at this entry, the stop loss will be just about 24 pips. I'm marking off this one here because normally, like I said before, I would put 2 to 4 zones in between, so we can get a retest in that area and then look for a continuation onwards. But we don't have that much range from the current price area, and into next week I will not be updating this, so I won't be encasing this resistance, just a current retest based on Friday's end results. And then we can mark off this area here, right? We're getting a few hiccups here. We have 1, 2, break below, break back above, and then we had that other interaction with the zone there. So these are realistically what we're looking for: pullback and continuation. All these charts are going to be sent off into the Telegram, so we'll be able to keep up. We'll be able to know that this is our starting point, and then as we progress through the week, if we actually pull back for a retest on any of these and actually get into an entry, then we'll be looking to stay updated with that and continue onwards. Okay, so let's go down to the next pair, Nzd Usd. This one, same thing. Previous markings aren't really there, but our zones are, and these zones were covered in the recap video of the losing week that we had last week. If you haven't seen that video, make sure you just go check it out so you can see the adaptation that we made, how we optimized for this week. Last week there was way more optimization that we did, and this week we just took some back because, well, not that we took some back, but we optimized a little more and we kept some things from last week. And then this week is a new week. Okay, so let's go through, delete this. Let's see what the weekly is saying. So the weekly formed a bullish candle. It did not like the resistance at the top. Okay, that's understandable because we have 1, 2, 3 candles rejecting that area. And then last week's candle also did the same thing. Nonetheless, it is a bullish candle. The week previous was a bullish candle as well. So we will be going with a bullish outlook for this. Let's pop down to the 4-hour time frame, and we have actually zones at the supreme low. We have a zone just right around here. And then finally, I'd like to just add in this zone right here. Just looking a bit back. So the reason why I want to add a zone just right in here, because there is some structure. I'm not just adding a zone for absolutely no reason. There is some structure right around here. But aside from that, the zone in between the first two, so the top one and the bottom one, is just about 30 pips. But if there was a rejection, if there was a break below any of these zones, I'd like to try to catch it on this mid zone, this intermediate zone, for rejection, a plausible rejection, to take it back to the upside. And then let's just look at these USDX pairs. So here we have USD Canadian. This one here is looking bullish. Actually, all the other USDX pairs are looking bullish for this week, actually. Here we have a bullish candle. Last week's candle, the previous one here with this indecision candle, has major rejections to the downside, indicating that it would like to go to the upside because there's buyers. Let's go down to the 4-hour time frame, see what zones we're dealing with, what relevant zones we're dealing with for a pullback. We have this one here. We have the supreme low in the market structure in this case. Do we need a mid zone? What's the difference between both of these? About 70 pips. So let's add a mid zone in there, just like this, because I can see that there's some hiccups. Let me zoom in a little. We have the start hiccup here, and then we had the complete break above, and then we have this slight test. Maybe I should include this in its area of interest. Yeah, we just enclosed the entire wick just like this. So the entire candle close to wick high is what we're covering, same way we should be drawing, and then we actually have that retest there. So same thing, pull back to any of these zones. We're actually interacting with one of these zones right now, so as long as we can get a bullish candle here, signifying the buyers coming in, signifying the rejection, we can then look to go back to the upside. Let's look at the USD Swiss. So we can actually delete this drawing that we have on here now. Look at the candles. So this is actually very interesting. So we had a lot of consolidation going on here. We have a bearish candle, bullish candle, bearish candle, bullish candle, with a lot of indecision in there. Bullish candle, bearish candle, then bullish candle. But nonetheless, let's just take note that we are staying in this zone. The resistance area here and the support is holding. So it's a big fight between buyers and sellers nonetheless. But if we're to go with what our analysis says, last week being bullish, this week is also supposed to have trend continuation. Trend continuation, I do want to say, for this weekly time frame is continuing nonetheless, because this is a ranging trend. So all trends are to continue. So if it's a ranging trend, the ranging is supposed to continue ultimately until it ends. Bearish market structure, all that is supposed to continue until it ends. Bullish market structure is supposed to continue until it ends. Okay, so where are our key zones for this area? We definitely have this structure low here. We have this structure pertaining to the highs, the previous highs, like that, and then we'll mark off this low area down here. So we have just 3 zones in here. If we do come back in for a double bottom, I will just mark that off. I'm not going to leave that off the table. But any markings that is not placed here in this, if it becomes relevant during the week, they will be updated in the Telegram as the trades are placed, as everything is placed. Because I do update them daily sometimes, just depending on the relevant zones. So let's look at our last pair here, USD Jpy. Also a very bullish pair. Last week was crazy bullish. Let's look at the weekly, see what's happening. So we're coming off this low. Looks like the structure is changing here. Let me draw this in, make this clear for you guys. So we got this, and we are coming up. So if we can get another retest for next week, that would be beautiful. Let's put this here at the start of the week, bullish 4-hour time frame, and see what our structure is that we can be interacting with, where we're going to be looking for our entries. So we have this one here, the structure playing very cleanly. This area actually last week posed a problem with the indecision, and that's one thing that was fixed about the EA. Last week we were taking both long and short trades for the week. In these cases, like you see in the way I was going through the analysis, it's long or short only. If it's long, we're only drawing supports. If it's short, we're only drawing resistances. So in this case, it's only going to be supports because we're only looking to go longwards. We have this zone here, which I need to mark off. And then we have this zone here, which I'd like to mark off as well. So we need just about, call it a 27, 30 pip pullback to this area, and then form a rejection so we can look to go higher on this pair. Yeah, that's how clean these charts are really going to be for this week. I'm just going to be sending these all to Telegram. Tomorrow, guys, tomorrow will be the first of the month, so there's a little special going on for you guys. So that's all I really want to say for this video, guys. Thank you for tuning in. Stay prepped. Like last week, I hope you learned the lessons that I learned as well. Just to understand that, well, we already know survival is a must in the markets. Next week, it's still the same thing. We're looking to journal our trades, stay on top of our game, and stay safe. Thank you guys for tuning in. I'll catch you guys in the next video. Peace.